Well, hello, everyone. Thanks for joining us today for our Financial Services Frontiers Real World GenAI and LLMs webinar. Appreciate everyone for making the time, if wherever you're calling in from today. So I'm going to get started here. For those of you who joined us today, thank you and welcome. We're thrilled to have you here today. My name is Blair de Jong, and I lead the ABM and reactivations efforts here at BairesDev, and I'll be your MC for the day. We put together a very good panel of some speakers to talk through some very good conversations that are happening right now in GenAI and LLMs in the financial services industry. And we want to talk a little bit more about what's happening on the ground, some of the real world things that are happening, whether it's implementations or results or real challenges. So the agenda today, we're going to talk through is we're going to introduce you to our speakers in a little bit here. We'll have a bit of an introduction from each one of them. And then we'll move into a bit of a moderated panel discussion where we'll ask them the questions of the speakers and we'll get some of their take on everything. And then finally, we'll wrap everything up with a live Q&A. So if you have any questions for us, there's a Q&A down at the bottom that you can definitely pose your questions, and we'll have some moderators there taking your questions so that as we move through the webinar, if we have time at the end, we will be able to answer those for you. So the reason why we're here, just to set the stage a little bit of why we're having today's webinar, as everyone's talking about AI these days, we know that there's a major shift that's happening in financial institutions as well. Gen AI and LLMs aren't just things that we're experimenting with anymore. If anything, they're being used to solve real operational challenges like fraud detection, automation, and customer engagement. And so with that shift, there comes a need for some strategic leadership and practical frameworks of what's actually working in the real world today. And that's what today's panel is all about. So we've assembled a few people to come and tell us their real world experience. So with that, I'm going to hand it over to our moderator, Justice Erolin. He's our CTO here at BairesDev.
Thank you, Blair. Pleasure to meet everybody here today. We're going to have two amazing panelists. We have Jacob from B of A, and we also have Stavros who will be joining us today from NYU. I'm excited to have both of them here. As a quick icebreaker, I'd love for both of you to, one, introduce yourself briefly, and then give us one exciting or unexpected application of Gen AI or LLMs you've seen in financial services. Jacob, we'll start with you.
Sure. So my name is Jacob Kosoff. I'm an AI model development executive here at Bank of America, based in our Atlanta offices. I've been in the role about 3 years. Before that, I was the head of model risk at another bank at Regions Bank. First, I just want to say all the views I share today are my own, and they're not representative of any specific bank. I'm really combine examples from multiple financial services firms. Fun fact, I think what I've really seen at the largest banks is the deployment of internal chatbots, right? In global payment systems, in legal, in the commercial bank, for people can really query internal templates, internal documents, internal procedures, internal standards. That's really, I've just been impressed with that. The explosion of that, explosion is too strong. The use of that over the last 6 months, where literally 6 months ago, many firms had no internal chatbots, and now jumping to June, you have multiple departments of chatbots. That's kind of I'm surprised a little bit by how fast it was deployed in the last 6 months, internal chatbots.
Well, that's amazing. Thank you, Jacob. And Stavros, let's go with you.
I would like to say thank you to Justice and Blair and Nathan and Cynthia for the welcoming here. I am an adjunct professor at New York University. I've been there for 10 years. I taught many courses, focusing more on AI and analytics in the last few years. I'm doing a little bit of research and publishing papers now. This is my hobby. My real day job is to lead AI initiatives, to lead AI practices. I joined Mutual of America in 2020 to write their first machine learning model. It's still in production, integrated with Salesforce. And fast forward, AI strategy, vision, implementation, building a generative AI platform with multiple applications in the last couple of years, and doing a lot of fun things. Now, with respect to what's interesting as it comes to financial services, I think we're now almost ready to nail what we call know your customer. and improve customer experience through hyper-personalized personalized service. I remember we talked about this more than 10 years ago while I was at Citigroup leading global transformation projects. But we never really had the opportunity, and many banks and financial institutions don't have an opportunity to provide hyper-personalized service. Now, through a combination of small language models that you can do processing of sensitive data internally in your data center, plus other larger models which can provide better services, their technique that there's no excuse for financial institutions to not be able to provide hyper-personalized service now in the near term. I think that's a big opportunity to improve. When we call and we say, press this, press that, then you talk to somebody, they don't know something. That's, I think, the big, of course, there are many other use cases, a ton of use cases through agentic compute that we can analyze, but that's what I want to share as an introduction. I'm here to share thoughts and ideas and experience with you all.
Thank you, Stavros. I think that's a great segue. What we're seeing right now is the foundations of Gen AI, and what we're going to be seeing in the future are the skyscrapers built upon those foundations. And it's clear that we're seeing both operational client-facing use cases emerge. So let's zoom in on how innovation and compliance coexist. Jacob, you oversee both AI innovation and compliance at BofA. How do you balance the need for Gen AI advancement with tight governance frameworks?
Yeah, great question. So I think B of A, very similar to JP, Wells, Citi as the four largest U.S. banks, have been taking a similar approach of responsible AI. So most have started off with helping associates with the 3 E's. What tools can we launch that help associates be more efficient, right? We don't want them working evenings and weekends. We want people to take all their vacation, take all their paid time off, all the maternity leave, anything they need. We want to make sure we create hours and capacity so they can do that. And it's pretty consistent across the large firms. The second E is effective. We want them to be able to do their work and have more impact, right? Catch more fraud, identify more credit risk, meet customers' needs more. And the third is engagement. All the large banks do annual surveys on their employees. And employees will often say they want the tools and resources to do their job better. And so what we've seen with the deployment of AI are tools to help them, right? More and more banks use GitHub Copilot or similar tools to help people with programming. More and more banks have chatbots so people can query their internal knowledge database, right? More and more firms are launching tools to help you write a first draft of a commercial credit approval memo, or a first draft of an audit report, or a first draft of a model risk management report, or a first draft of a model document, or query tools where you can ask questions against all your model validation reports, or all your audit reports, or all your client memos, or all your global research. And so I think one way to help balance some of the regulatory risk is that where I've seen the focus for large banks in 2025 is the internal focus, right? Because there is extra risk, extra regulatory requirements when you go out and interact with customers. There is a different standard when it's internal, right? You have more subject matter expertise. It's helping guide a human decision. In many cases, it's not an auto decision, right? It's still the human at the bank that has to make the coding decision, whether they use the suggestions from GitHub Copilot. It's still the marketer at the bank that makes the final decision, whether they use the first draft. It's still the manager who has to make a decision on yes or no on this decision and factor in the model's input. And so I think that's really where the balance is, that banks have historically built strong risk management in the spirit of Federal Reserve and OCC guidance, Federal Reserve SR 11.7, which came out in April of 2011, which really set the foundation for model risk management. And I see banks over the last few years have really strengthened, but also kind of adapted and right-sized it, the risk management approach to AI, where certain things work, certain things don't, and have been pretty nimble the last few years, following the spirit of regulatory guidance to make sure they're really having strong risk management on AI. They brought tech risk in to help them. They brought in third-party risk management to help them. Legal plays a larger role. Privacy risk plays a much larger role. I'd say, yeah, technology risk and third-party risk play larger and larger roles. And so what I've seen is banks take a thoughtful approach to risk management, not like a check the box, but, are we really managing risk? Some things they've stopped doing because it really wasn't adding any value, and other parts of risk they've done a lot more. So net, I would say that risk management is still strong, but some areas are stronger, some are weaker. It's like if you have an electric car and you bring it to the mechanic, they're going to be doing different things than if you have a combustion engine car, right? And so similar thing with risk management. So I think that's the balance, and the main focus has been helping employees be the 3 E's: be more efficient, more effective, and more engaged, right? Those are the three. Are they happy or are they not? Are they more effective? Are they more efficient?
I love that. It seems like instead of replacing, you're more of enhancing current employee capability.
Correct.
Great. Great. And as a follow-up question to that, when we're
Yeah.
looking at your cross-industry experience, how do you move from how do you use Gen AI to move from proof of concept into a more production level impact within fintech?
Yeah. So I would say I've seen successful starting a project off with a small set of people. So firms will often say, even just rolling out GitHub Copilot, right? You started a year and a half ago with 100 employees. You've gotten feedback. It works well here. It doesn't work well here. Maybe how does it perform on converting code from SAS to Python? How does it work with acronyms? How does it work on certain functions? How does it work on certain models or on certain tasks? And then rolled out to 500 employees, rolled up to 1,000 employees. How does it work on your in your development environment? How is it working where its constraints are, and where it doesn't perform well, you bring it back. Same with rolling out maybe next best action tools in the contact center. Where does it work well? Where does it work not well? Maybe it works well. Maybe it doesn't work well when the customer English is a second language. Okay, so let's maybe not use the tool there. Or a fraud model. Hey, maybe it doesn't work well in this type of use case, but works well there. So I think that's where you've built the confidence by trying it with a small set of employees or a small set of customers, seeing how well it works, recognizing the weaknesses and limitations where it doesn't work, turning it off in the spots where it doesn't work, right? Okay, meeting summarization doesn't work in these areas because it brings too much legal risk or performs poorly, or it stifles honest and earnest conversation. So we'll have no meeting summarization allowed in this situation. But here it actually works really well, and it doesn't stifle honest conversation, so we'll have it turned on. And so I think that's where I've seen the best use of pilots, starting with a set amount of employees, a set how you're going to monitor if it's performing well or not, like ongoing monitoring metrics, and then rolling out larger and larger.
Got it. Thank you. One consistent theme that from there is that we're seeing friction, whether it's in the technical or the organizational part. Stavros, let's explore that gap between theory and execution. From your academic and industry lens, what frictions have you seen that when trying to operationalize Gen AI in financial services?
Excellent question. And there are many friction points. They're getting better. But to the previous question, I agree 100% with Jacob. You need to start small, and you need to take adoption into your solution process. And you need to make sure that you go top down, left, right, and bottom up in order to enable people to understand what's possible. And a quick example, 2.5 years ago, I gave a presentation to our CEO and the executive team about what ChatGPT and LLMs were and what's the potential for the company. And within 20 minutes, we got approval to go ahead with training employees, with running hackathons, getting ideas, and then building a generative AI platform where we can build more applications for different business units. So adoption is critical, and having people understand what's going on, having your legal department and compliance department on board with you is very important. And oftentimes you automate their work to help them support you as you build AI and Gen AI solutions. Now, to your question about challenges and constraints as we move from strategy to execution. First of all, it's important to have in mind as you start anything, any proof of concept of any use case, to have productization in mind. If you just go to do a POC, it better be less than 1 or 2 weeks maximum to show people the potential. But anything that you start really and you engage resources, you need to have in mind how to move it to production and how to scale it later. Now, with respect to constraints and challenges, I would say there are several still, much better than 3, 4, 5 years ago. One of them is data quality and access silos. So having access to the data that you need for the specific use case, and ensuring that you use the right data, whether it is to move it into your RAG pipelines or to have an agentic AI process that accesses that data, it is important that you ensure that the data is appropriate and it's of the right quality, and also it is a single point of truth that you're accessing, and not different versions, especially when you deal with customer service and customer experience. You don't want to make mistakes through your process and provide them incorrect information. Access silos is also a challenge because people, as we know, in many large organizations, they need to approve access to that specific part of the operational data that you need in order to implement the use case. So working with them hand in hand in order to have access is important. Now, in my own practice, we build connectors to different data points and move them into our pipelines, whether it is knowledge base that we move data or process data in order to make it appropriate for the AI models or the GenAI pipelines. We decided the best way is to move it there and access it automatically and update our system data automatically. So having those, data points that are properly accessed and of the quality you need for the use case is important. Second, regulatory compliance and model governance. Of course, you have to have model governance, data governance into your AI applications and systems. Regulatory compliance, the way that I work with respective teams on that was to automate the requirements. So the regulatory requirements that we have through compliance, risk, internal audit, information security, and all the other groups, we work closely with them in order to automate them. And how do we automate them? We create embeddings. We make them part of the process, of execution process, so that we live test adherence to those requirements, and we provide reports. And if we see that they're going towards threshold, the way that the system interacts when it comes to GenAI, if it goes towards thresholds that we may go over, then we need to update our pipelines. Sometimes the solution is simple: just update your layers of front engineering within your system. So that's the other issue: regulatory compliance and model governance, and how you address that. Of course, we have legacy infrastructure and integration issues. You don't want people to learn something new. In the GenAI platform that I built, we connected our platform with endpoints that the users are used to, such as Salesforce, such as websites, such as other marketing tools. So we're able to make those connections, but I understand that many times, especially when we have old mainframes and not so easily integratable components, we need to work a little bit harder on that infrastructure integration. Another issue, I would say, and I'm going a little bit more to the strategic and leadership, is lack of seasoned AI leadership at the executive level. And what I mean by that is that in order to be effective with your solutioning in AI, your AI leaders need to have good knowledge, very good knowledge of what's possible and the latest, breakthroughs in AI, but also have multidisciplinary experience in many different fields, so they can bridge the gap between the technology, the business, and the strategic impact. So I see that several initiatives that lack seasoned AI leadership at the executive level becomes a challenge, especially for people who are focused more on technology and not on business value generation. A couple more quick things, and I'm closing with that. A misalignment between strategy and business impact. We don't build an AI solution because it's cool. Well, we can do that on the weekend and show people, but we build because it has a business impact. So as soon as you start envisioning what you will do and how you will scale, you need to tie that with KPIs. KPIs that you derived with business units and the leadership, and you make sure they're aligned with the business strategy. And as you derive those KPIs, you make sure that they're baked into your execution, and you can measure results, whether it is customer experience impact, brand impact, anything else, financial reporting, you name it. You need to have clear KPIs that you can measure as a system is in production, that you meet those and make adjustments along the way. And the last thing I would like to mention is talent gaps and organizational readiness. We see that there's an enormous number of open jobs that are related to AI engineers, etc. And it is a challenge for many organizations to find the right talent, because within a day you have, like, I saw one this morning, and it was posted yesterday and had close to 900 applications. Of course, candidates use AI, HR groups use AI, so it becomes more important now to find the right talent, and build your organization into readiness to deliver AI in a way that makes sense and provides transformation and also survivability for the company. I strongly believe that companies that don't embrace and implement AI solutions will stay far behind in the next couple of years. And
Thank
thank
you.
you. Sure.
Thank you, Stavros. So, when we're looking at a number of those items, you mentioned data access, you mentioned data quality, lack of AI leadership within, or AI knowledge within the leadership level. There was a separate, let's make that a little bit more succinct, a little bit more detailed. LLMs are notorious for hallucination, right? How are we addressing reliability in production financial use cases? How do you get past the hallucinations or avoid it altogether?
Excellent point. And the answer a year and a half ago would be different than today. So the models improve, certainly improve, but you cannot trust a model to not hallucinate, no matter how good it is now and in the near term. So you need to contain, when we're talking about generative AI and agentic AI, you need to contain within the domain of the conversation, if it's a conversational AI assistant, or any other application you have, to contain the answer within the domain where it should be. And of course, we all know that RAG and vector databases work very well, but that's not enough. Even different flavors of RAG, that's not enough. We need to ensure that our pipeline includes additional components, modules that test the answers and the quality of the conversation to minimize and eliminate hallucinations. In fact, in our testing and automated testing, where we have thousands of test cases, in the previous GenAI platform that I built with my team, we did not have any hallucination. We had zero hallucinations, and it was remarkable. But there were many layers of prompt engineering pipelines, understanding the persona, understanding the question, the conversation, understanding the data, triple checking for the quality, and all this in almost real time, the quality of the responses, understanding the sentiment, understanding automatically if there is a potential of hallucination or misunderstanding of the answer to the user. So there are many techniques you can use to minimize or eliminate hallucinations, and of course each use case has different implementation parameters. But the key point is to make sure it is contained within the domain of the use case.
Yeah, and Jacob, we were talking about this
Yeah.
backstage as well, right? We were talking about containment. Can you give us your take on that and how you're using it within B of A and other banks?
Right. So I'll give an example from a peer institution. So they had a manual process to identify customer complaints, meaning a customer would call in, the financial service representative would really have multiple responsibilities. One is to help solve the customer's need, right? The customer calls in, they say, I never got my credit card in the mail, and can you help me? Okay, we're going to mail one to this address. Is that still your address? No, that's not my address anymore. Okay, what's your address? What type of card do you need, and so forth. At the same time, they have to identify, is that a complaint? Are they saying that the card was lost? Are they saying that the card was stolen? Are they just complaining that it's been taking a long time, right? And then the employee would have to capture the complaint, both classify it, right? Check a box, card lost, card stolen, and write a summary. So then later on, another set of humans, right? Usually they're called employee quality review. They're often in an enterprise independent testing function. They would listen to the recorded call, to the employee and the customer, and see if the employee did the right steps, right? Did they follow the bank's policies, procedures? Did they say the right thing? Did they adjudicate it appropriately? And then they would listen and say, oh, wait a minute, okay, this was a complaint or wasn't a complaint. And they would match it. And so you'd have a human classifying, and then you'd have a human in the second line testing to see if your processes were followed. So you could say, okay, well, the humans sometimes hallucinate. The humans sometimes are wrong. Humans aren't perfect. There are no, super humans here in any of the banks. And so people naturally have human errors. I have errors, you have errors, everyone has errors. So then we say, okay, well, let's look at the model. Let's say we have a model that can classify. So in a pilot, we say for the employee, the customer center, contact center employee, they should just focus on helping the customer with their needs. Customer needs a new card. Okay, let's get you the new card. Any other needs you have. Oh, you need to increase your credit limit. Okay, let's work on that. Oh, you need a mortgage. Let's work on that. And don't worry about writing a summary of the call. Don't worry about writing a summary of the complaint. Don't worry about classifying it. We'll have a model, a large language model, that'll be a complaint identification and summarizer model. And you do your thing. We have that model. So then, all right, so that's that pilot. And then we have still the same employees in the second line, the employee quality review team, that's going to listen to recorded calls that are not live, right? They listen to calls weeks later. And they're also going to see if, now, of course, they could be wrong, but let's hold that for a second. And they'll say, okay, how well were the complaints captured? So then you could say, all right, in the second case, in the pilot case with the large language model, all right, were 90% of complaints captured? Okay, great, according to the second line. But when it was just human only, maybe only 80% were captured. Okay, well, now you see, okay, the large language model is not perfect. It hallucinates, but it's X% better than a human. So now we dive and say, what cases did the employees capture a complaint that the model didn't? Maybe when it was notification of death, right? That's an example where customer calls in, very sad, tragic, it's a rare call. Hi, my spouse passed away this morning. What do? I have 1 million accounts. I have no idea what to do. Maybe the model doesn't do so well in summarizing it, but the human does a lot better with the empathy and the sympathy and classifying it. And so we could, okay, in those calls, maybe we don't use the model. Or in customers of English as a second language, we don't use the model. Or maybe when the customer calls in, there's a lot of background noise, or they're driving, or they're in a busy food court, we don't use the model. So recognizing where the model does better than the employee in X cases, great, we can use the model, free up the employee so they can focus on the customer, not multitask, not try to solve their needs and write a summary and click which the complaint was. Focus on the customer's needs, better experience for the customer. They're able to meet the customer's needs in less minutes, which means the other customers aren't waiting on hold. So if usually the call is 4 minutes, now the call is 3 minutes and 45 seconds. Saving that 15 seconds per call helps the customer. They don't feel like they have to be on the phone forever to just get a new credit card. It helps the other customers who are on hold. So instead of waiting a minute, now they're only waiting 45 seconds or X amount. So it helps the customers on hold. It helps the customer feel more valued, like they're heard. The employee isn't writing things and solving things that aren't related or classifying. They're focused on you. So it helps the customer, helps the other customers in line, make the customer experience better, makes it more efficient for them. They're not wasting their time, and also helps the bank. We can help meet more customer needs in a quicker amount of time and meet more customer needs. And then where the model doesn't work and say, okay, if these 5% of calls or 7% of calls, we won't use the solution. And so I think that's where I've really seen the use of large language models is that, yes, they're not perfect. Yes, they hallucinate. In some areas, this many areas, they're better than the human. In this many areas, they're worse than the human. So where they're better than the human, let's use it. Where they're worse than the human, where they're tied, we can figure out what to do there. And then it's hopefully a win-win-win. And then from a staffing point of view, maybe you have a contact center with 1,000 people. Maybe you have a 5% annual turnover rate. You have 1,000 people, 50 people leave per year, retire, move somewhere else to the bank, leave the workforce, go to another firm. Maybe when those 50 leave, you only hire 45. Maybe you hire 47, you hire 43. You have some type of 80 to 90% backfill rate, but you really need 100%. Because when we think about tasks, you say an employee, like I haven't seen in the large banks we are automating a job. I have not seen that. I haven't even seen a goal of that. I haven't seen a desire for that. I haven't seen a hope for that. It's rather, let's look at their tasks. Or the person has 10 tasks. All right. And each task, let's say, takes 10% of their time. This task, we can automate 3% of it. So now, okay, so that's really you're only automating, or sorry, we can automate 30% of this one task, and that'll free up 3% of their time. So instead of them spending 100 hours over 2.5 weeks of time, they only really need to spend 97 hours. So that means more hours to meet more customer needs, or for more training, or maybe we increase our vacation, or increase our sabbatical, or maybe we every time 50 people leave, we only backfill 49. And so that's where I've really been seeing the benefits. And so even when it hallucinates, be very clear where it performs worse, and having guardrails or not using the model there.
Got it. Thank you.
Yes,
And
if I
Stavros, go
can
ahead.
add a quick
Yeah.
point there to Jacob's excellent remark about specifics. The specific use case is where you need to discover the details about value generation. And at that time, you have to deal with adoption with your peers that may have traditional deterministic way of thinking, an expectation that this will work perfectly. This AI solution or product that you are developing may not work perfectly, but may generate fantastic value. So just a quick example, I was working for a startup a few years ago, and our customer was one of the big four consulting firms. They were paying hundreds of thousands for a model, an NLP model, that for their legal team, they were processing lease agreements. We're talking about 7 years ago, 6-7 years ago. And they were paying hundreds of thousands per year for a model that was only 60% good, because it would save them millions of dollars for their team in processing those agreements. It was still generating fantastic value, and it was only 60%. Now, the expectation here that we're going to 90, 95%, 98%, of course, as we close to 100% generalization is a problem. So you have other techniques, as you deal with potential hallucination, a use case, explainability, tuning, and other things you can address to improve the model. But also you need to tell your peers what the expectation is, and you exceed that expectation in your solution. Yeah, go ahead, Justice. Yeah, I just went to that point.
Thank you for that point. And then
Sure.
you mentioned things like specialization, containment. The next frontier in AI is around autonomy. On the edge of flexibility is autonomy. So let's talk about agentic systems. While agentic AI is still relatively early, where are you seeing meaningful use?
Well, one area I'd say is
Jacob?
on the receiving end. Or sure, I'll just give one small example on the receiving end. I'll send to Stavros, is that large bank, or probably multiple banks. So I just interacted with the large banks. Is that in their contact center, they are having agents, right? AI agents call them, right? Because say you haven't paid back your auto loan, or you haven't paid back your credit card or your mortgage. You can use an agent that'll then call the bank, right? And so now the human, the employee that works at the bank employee, the financial service representative in the contact center, has a phone call and says, "Hi, I'm Amy. I'm an AI agent. I'm calling on behalf of Jacob Kosoff. He would like to resolve his collection for $2,000 on his auto loan." And now the human, who historically have not been trained to interact with agents, but are now on it literally today, as we're speaking, there are agents calling contact centers at Wells, at Citi, at JP. It's been happening last week, happened the week before. It's been happening for months now, right? So for months, customers have been using AI agents. So now it really brings up this fundamental question, is that banks are we can talk about us using agents for sure, and we'll talk about that, and that's very important. But really what's top of mind is how agents are interacting with us. People are using agents to transfer money from one checking account to another, to search for higher interest rates, or to meet an obligation. So there are other firms that have agents that will move your money. They'll have other agents that'll challenge your collections on your loan to a bank. You have agents that are making processes for you. And what happens if that's fraud? What happens if that agent's acting in a nefarious way? What happens if that's not really the agent? How do we authenticate, right? An agent, a customer, or maybe a non-customer who's pretending to be a customer, a nefarious actor is using an AI agent to transfer money from one account to another, is using an agent to do a behavior that the actual principal, the actual real genuine customer does not want. And so when we think about fraud, we think about money laundering, we think about surveillance, trade issues, we think about a variety of problems, And risks, I think that the top of mind from my conversations have been people using agents against the banks. That's one, and so really figuring that out. And not just against, some are then using it productively. Hey, I want to move money automatically from this CD to that, from one bank to the other, because they have agents that can search and find higher interest rates. Also agents that pay bills for you, which is also an issue, and then dispute. The second is then using agents internally, and there's been pilots of that at the large financial institutions, some related to checking private data versus public data and data being released. And there's agents related to some compliance activities, related to some operations activities. I've seen agents used also in the contact center. So there's various ways have been used, but I think really top of mind I've seen the last few weeks is how to handle people using agents in their interactions with the bank.
Thank you, Stavros. Anything to add to that?
Yeah, sure. Good point. So agentic AI and agents are new. Just to make sure everybody's level set on what we mean, or at least how I see it, what agentic AI is. Agentic AI consists of pipelines of agents, and agents are set of tools that typically use large language or small language models in order to automate certain processes. And in that automation, it includes reasoning, understanding, and decision making. So, of course, it involves a lot of additional coding. You cannot just trust a language model, large or small, to complete an agentic pipeline. It includes a lot of details. And we see an explosion. I was at a roundtable last week with IBM and HFS, and we're talking about agents for 4 hours. So that was the center stage of the conversation. It's still new. So in the financial services, we need to be a little bit extra careful on how we implement it and how we can scale up. So I'm a little bit cautious at this point. Maybe in 3-4 months, and 3-4 months from now, I will be less cautious. But we see a lot of examples already. For example, we see at Morgan Stanley AI at work that they analyze client goals, market data, and other things like that using agentic pipelines. We see Betterment's goal-based automation that the agents automatically allocate assets, etc. So automated wealth management or robo-advisors is where we see agentic pipelines that have been implemented. Fraud detection, anti-money laundering, big. We always have challenges. I was leading anti-money laundering transformation for Citigroup before. I gave a lot of talks to fraud examiners for how to detect, but we see HSBC using AI agents for that purpose. And we also see MasterCard decision intelligence to analyze payment patterns real time using agents in order to detect fraud and prevent anti-money laundering undetected. And there are many other examples that we can use, but automation, being able to reason for the tool pipeline to reason and make decisions in the pipeline, what to do next, is important. Now, I want to close with this about the agents and the adoption. We implement agents that operate within strict guardrails. So we have manual deterministic code components into our agentic pipelines to make sure we do not go outside the area where it should be. For example, you never approve a loan without a human review if the credit score is greater than a certain number. That's an example. Auditability. We have full decision logs for regulators to provide to regulators in financial industry about how certain decisions were made by agents, and of course hybrid control. In other words, we need to include in many use cases now, maybe in the future that will change, human oversight. And that can be automated somehow to provide experts, subject matter experts, with summaries, with edge cases, with thresholds that they're being approached through that decisioning pipeline. Of course, they say agentic AI is the big revolution, and I believe that, and that's why there's so much discussion about it out there. Yeah.
Great. And Stavros, you touched on a topic that was in the chat about explainability and train of thought. So I'm glad you touched on that a bit. We have time for one more question, then we're going to transition this into the floor's Q&A. But one last question for both of you. If you had to place a bet, and Jacob, this could be a sushi dinner or a steak dinner, what financial process or customer experience do you think will be fully AI powered within the next 2 years? And I'm saying 2 years because 5 years is too long. 2 years
Right.
feels ahead enough.
So I would say for bank employees, it'll be interacting more with chatbots, right? You're in the legal department, you're in you're customer facing, you're a banker, a relationship manager. You have questions instead of the current kind of search, which looks kind of like a Google search at most banks. You're searching and then it gives you the documents to go read. It's going to feel more like a chatbot, feeling more like using Chat GPT. It's going to feel like using, well, like Perplexity and Chat GPT. It's going to have that feel as the payments teams rolls out, the treasury teams roll it out, and CFO rolls it out, and global markets roll it out. Is that associates, when they have a question, obviously they can ask their human that's walking by and ask people around, but when they want to go up against something that has 200 documents or even one document, you're going to see this evolution away from control find and the internal search with these chatbots of, I'm a trader, what's the daily limit for this? Or building a model, how often do I have to, what sections do I have to fill out? Or how often does this have to be validated? Or, hey, I'm going to publish this report. Do I have to check against the deal book? Or like, hey, I'm going to make this loan. What's the daily limit? Or what's the limit I can lend for this one? Okay, it's 100 million, and then I need approval from this committee and 500 million for this committee. Like, it'll be a lot more kind of asking those questions. I'm already seeing that in a lot of firms. So many firms just in the last 6 months have rolled out chatbot, these kind of equivalent to Perplexity and ChatGPT for their employees for different areas. Of course, they can strain the data. Like the one in HR, they can look up a salary, but I can't go look up people's salaries. That's constrained, right? And the same one, people in CFO can look up different things than global markets. We can look up different things than global payments across the large banks. So I think that's really going to be it, that most employees, as part of their day, will have access to a chat tool, a summarization tool, trained on the materials that they use for their work, their policies, their documents, their procedures.
Thank you. Thank you, Jacob. And
Yeah.
Stavros, what's your take?
Yeah, I will take that one. There are many use cases that I think it will help being automated, process being automated in the next couple of years. But to give you a quick example, that's actually, I'm looking forward to that. Me and my wife were looking to relocate potentially in the next year. So in the end of this year, we're going to be looking for property and of course, mortgage. I hope by the end of this year, most mortgage providers will have end-to-end automation from document injection using computer vision to risk assessment using small language models internally that will minimize the potential that the data is being accessed by the language models or outside. It's going to have agentic workflows for regulatory checks and many other things. So when I apply for mortgage, I'm going to have an answer within a few minutes. And of course, for people that there are different credit risk areas that will take more than a few minutes. But I know there are pilots in some banks, such as Wells Fargo and Rocket Mortgage, at this point for this AI-powered mortgage approval. And I think there's no point not to do that now. We have the tools, and if you build it carefully with scale in mind, using agentic pipelines and other techniques in deep learning and predictive machine learning, you can provide that excellent customer experience when it comes to mortgage approvals or other things. So that's under the umbrella of hyper personalized customer service that has a multitude of benefits for the company, not only brand perception, but also improving process so much for all of us, and whether it is an employee or an outside customer. So that's what I think we're going to see a lot of improvement in the next couple of years.
Thank you, Stavros. Before I transition it over to Blair, one thing that stood out to me in this conversation was GenAI's promise is real. Even with the constraints, whether it's regulatory, architectural, operational, and that's where firms like ourselves, where we lean in. At BairesDev, we are helping multiple institutions bridge that exact gap. And so if this discussion sparked any ideas or any pain points, we would love to be your thought partner in this. So on to you, Blair.
Thanks, Justice. And thank you, Jacob and Stavros, for sharing us your insights on what's been going on in the world of Gen AI. So we've got a few questions from the crowd that we'd love to pose to you as well. Just and the first one's actually to you, Jacob, and I don't know, just bank sensitivities, how much of this you can answer or not, but we'll read the question and you let us know, okay? The question is MRM at Bank of America addressing third-party model risk management for SaaS vendors, or is it only focused on internal AI or Gen AI applications?
Right, so I won't answer for B of A, but I've been
Sure.
obviously talking with a lot of my
course.
peers. And so most firms have rigorous risk management for models, whether they're built internally or they're built by third parties. And it's really a combination. I've seen MRM play a secondary role or a primary role. And there it's firm to firm. Third party risk management often works hand in glove with model risk management. Some firms call it vendor risk management, third party risk management, work very closely with cyber risk management, working very closely with privacy, with compliance and operational risk. So what I've seen at the largest banks is that whether it's an internal model or it's a vendor model, whether it's AI or it's not AI, that they're committed to having practical and effective risk management. In a way, it's the step one. What I've seen really at so many banks is imagine there are no regulators, right? Just to pretend a world of no regulators. What would we care about, right? When you think about making a loan, you don't check, probability of default or loss given default because of regulators. You say, no, if I'm making a loan, I want to get paid back. If I give you $100, I want to get my $100 back plus some interest. I want to get $105 back. If I'm making a loan against an airplane, against a house, against a boat, I want to know the value of that collateral, or against natural gas or oil. So the same thing is that at the heart of risk management, it's not regulatory compliance. The heart of risk management is to not end up like Silicon Valley Bank, right? Is not to end up like the firms in 2008 that went under, that they lost all their investors' money, right? That they lost the capital, the firms that don't exist anymore, the Lehman Brothers of the world, right? You don't want to under like the Lehman Brothers, the WAMUs, and so forth. And so at the heart of risk management, the same with model risk, is that what could go wrong? As banks use models, obviously they've been using models for a long time, right? They've been using underwriting models and credit cards for decades, right? They've been using fraud models. They've been using anti-money laundering models. Now these are new sets of technologies, which can, some ways, are harder to validate. You have to bring in different players. Third-party risk plays a bigger role. Cyber risk plays a bigger role. Technology risk management, TRM, plays a significantly bigger role. Model risk management might play a different role, but overall, I would say there isn't more or less risk management. It's still probably the same amount, like in terms of like hours per model. There's maybe different players testing different things. And so that's what I've been impressed with is that rarely in a meeting we say, oh, what would the regulators think? What I'm seeing more often in meetings is, how do we know if this thing's working? Like, what reputation risk are we bringing from this model not working? What operational risk? Is this actually giving the output? And so, when I work with people that are in the fraud space, it's I want to know if my model's working. Are we stop being fraud? In the credit space, are we making loans appropriately, or are we misinterpreting the probability of default? So I think that's really been driving it. And that from the regulator point of view, I don't know, but my assessment, the regulators would be happier when they see we really take risk management seriously. We're doing testing because we want these to work, as opposed to we're doing these to make the regulators happy. And I think the regulators are happier when we're not trying to make them happy. The regulators are happier when we take it seriously. It's like your kids, are they eating broccoli to make you happy? They're not so happy if they eat broccoli. Oh, mom's coming. Let me take a bite of broccoli. No, if they're eating broccoli because they care about their health, they care about making healthy decisions. They keep a bag of carrots in front of them at work at all times. Healthy snack, healthy. Is that they're making the choice. So I think that's how we are with the regulators. That when the regulators see we care and we're not doing it for them, you end up with less MRAs and less MRIAs that we're only doing it for them.
Got it. Okay. Thanks, Jacob. Stavros, question for you. And I think you talked earlier a bit about the talent gap you were seeing. And, we were curious about, as you're scaling AI initiatives within a company, how are you thinking about both team structure and talent, in terms of what skills are the most valuable that you'd be looking for, and maybe some hiring lessons maybe that you've observed along the way? We've got a few questions.
Okay. So both at New York University my students, and my students include professionals. Last semester, I had a chief operating officer with over 20 years of experience, and took my 2 courses, and then had his team using what he learned in my course. So both at New York University and also in my team in the industry, I encourage and expect that people wear many hats. We do not have access to data engineering team. We have to learn data engineering. We don't have access, for example, to built-in or more detail on how to build a Docker image and push it into Kubernetes. We had to go and learn how to do that. We cannot just expect in 2025 and find an excuse that I need a week to go figure out. That's something that ChatGPT and all this other Gemini and all these other tools can give you the answer within a few minutes with high degree of accuracy. So with respect to the talent, we need to continuously learn. And this is what I'm looking at candidates. I'm looking at myself when I go to interview for a new role, for instance. And there's so much to learn, but how do you focus on what's really important? Depends on your level. So the interns I hired, give them specific tasks, go learn about that specific implementation, whether it is using Copilot or using Python to build an agentic pipeline. And if you talk about individuals at the senior level with strategic decision making, and look at experience, critical thinking, and also knowledge of the latest technologies that can be applicable to a specific project, let's say, or product development. So it's hard to find the right talent because now many people know everything. So that becomes a challenge, right, Jacob?
Mhm.
So when you look at the resumes all being customized to know everything and all the keywords that are being looked for. So that's one of the challenge in 2025, identify the right talent. But the common denominator is show me examples how you think and how you complete it end to end, and how you move things to production, and keep them in production and test if it's like predictive model, check for drift, how often did you do it, how did you automate that process, things like that. I'm looking into individuals that work in my team and I work with in other teams to be able to deliver, envision and deliver. In my work at the financial recently, my team was a startup within a traditional conservative thinking organization. So we built a lot of things by acting that way, by figuring out how to do things and how they align with our strategic guidelines and goals.
Mhm. For sure.
Yeah.
Jacob, did you have anything to mention there about how you think about talent or team structure?
Yeah, just trying to be really thoughtful on who we hire, and also just being really honest what the role is. So if the role has this much programming in it, and the candidate thinks the role is going to have this much programming in it, they're going to be disappointed. So we really want to make sure we're always very honest with what the role is, what the tasks are, and what percentage of the tasks are what. And so we don't spend. We want to make sure the interview reflects. So if only 20% of the day is hands and keys programming, only 20% of our questions should be about programming, right? So really mindful. A lot of the roles to build off Stavros's point are getting projects end to end. How have you thought through that? How have you done that? Where is the business impact? How do you think through business impact? How do you think through prioritization? How do you think through return on investment? How do you think through working with partners and collaborating? You're not building something in isolation by yourself in the corner. You're working with others. So a lot of focus on the collaboration and give me real experiences where you've done that. And just also just really being honest on what the day-to-day work is. So they don't think it's a lot of very exciting stuff when only it's a moderate amount of exciting stuff, So just this way no one's disappointed if they take the role.
Okay. Well, we have a whole bunch of other questions. We would love to get to all of them, but we also know your time is precious with us. So we really appreciate you making the time, both Jacob and Stavros. And we appreciate all the attendees on the webinar today. We've had over 100 people show up today, which is awesome to see. Lots of people interested in about this topic. So we might have to schedule part 2, perhaps, in the future to get through all the interests. So we really want to thank everyone for making the time today. First of all, Jacob, thank you. Stavros, thank you for sharing your insights and your experiences. Thank you, Justice, for moderating the panel and the questions. And thank you, everyone else, for attending. So We'll maybe park it there and have a great rest of your day, everyone. Thanks for making the time.